Something unusual is happening in Florida, and almost no one saw it coming. For the first time in years, rents across several Florida cities are dropping fast, not by a few dollars, but in some cases by double-digit percentages. Landlords who were raising prices just last year are now offering concessions, slashing monthly rates, and scrambling to fill units. And today, we're diving deep into the data. Welcome to the Globe Realty, and in this video, Florida rent collapse, 10 cities where rent prices are crashing fast, new data. We break down what's really driving this sudden shift in the Florida housing market. From oversupply to migration slowdowns to affordability pressure, these trends are revealing the earliest signs of a major market correction, and some cities are getting hit much harder than others. In this countdown, we're exposing the top 10 Florida rent drops using brand new 2025 data. And trust me, the city that ranks number 1 will shock even seasoned investors. If you care about Florida real estate, investing opportunities, or understanding where the housing market is heading next, watch closely. Every second of this breakdown matters. Before we jump in, hit the like, subscribe to the Globe Realty, and turn on notifications so you never miss our weekly market updates from across the nation. Let's get started. Number 10. Fort Myers, Florida. Coming in at number 10 on our list is Fort Myers, a market that has gone from white-hot to unexpectedly wobbly in a very short period. And if you've been following the Florida housing market closely, this shift shouldn't surprise you. But the speed of it might. Let's break it down. Fort Myers has long ridden the wave of the Cape Coral-Fort Myers metro boom, a region that ranked among America's fastest-growing metros for several years. But that growth came with a price: massive overbuilding, rapid multifamily development, and a pipeline of new units that simply outpaced real renter demand. And that's where today's rent collapse begins. New data for 2025 shows that rents in the broader metro are now dropping at some of the steepest rates in Florida, with Cape Coral seeing declines above 6%, and Fort Myers mirroring the same downward pull. Thousands of new units hit the market at the same time, and vacancy rates started climbing fast. Landlords have suddenly gone from wait lists to empty units. They are slashing prices and offering free months of rent. They are throwing out concessions like candy at a parade. The question remains, did Fort Myers grow too fast for its own good? Because when you look at how quickly inventory has flooded the market, the answer feels painfully obvious. But oversupply isn't the whole story. Another major factor is migration slowdown. During the pandemic, Fort Myers experienced one of the most aggressive influxes of out-of-state movers, many paying premium rents. But now, Florida's migration numbers have cooled, insurance rates are crushing affordability, and the sunshine discount renters once enjoyed has evaporated. Demand is no longer keeping up with the tidal wave of supply. So now landlords in Fort Myers, who were raising rents 20 to 30% just 2 years ago, are cutting prices because they're being undercut by brand new luxury complexes still desperate to fill units. And that puts downward pressure across the entire rental ecosystem. Is Fort Myers heading toward a full-blown rental recession? It's still too early to declare that. But one thing is certain: this is no temporary blip. The data suggests a structural shift driven by oversupply, softer demand, and economic pressure on both renters and landlords. Number 9. Crestview, Florida. Coming in at number 9, Crestview. Yes, Crestview. A smaller panhandle market that rarely makes headlines, yet right now it's quietly revealing something major about the state of Florida's rental landscape. According to RealPage and multiple rental analytics sources highlighted by CRE Daily, Crestview has recently posted 4 to 5% year-over-year rent declines, a striking reversal for a market that was booming during the pandemic surge. That's a significant drop for a smaller city, and it raises a crucial question. If a quiet, steady market like Crestview is slipping, what does that say about the bigger Florida picture? One of the biggest drivers behind Crestview's rent collapse is affordability pressure meeting supply expansion. This city saw a surprising wave of multifamily construction between 2021 and 2023, fueled by developers chasing cheaper land and lower regulatory friction. But here's the twist. Crestview didn't get the same level of incoming population as other Florida hotspots, which means the new apartments didn't have the same renter pool to depend on. And when supply grows faster than demand, prices fall fast. But there's another factor at play, one most analysts don't talk about: tenant behavior. With insurance, utilities, and basic living costs rising across Florida, renters in smaller markets like Crestview are becoming far more price-sensitive. They're negotiating aggressively, moving more selectively, and refusing units that would have been snapped up instantly 2 years ago. Even a $50 difference now pushes people to relocate or stay put longer. Let me ask you this. Have we finally reached the point where Florida's affordability wall is pushing back? Because Crestview is the perfect example of a city that didn't crash due to luxury oversupply or massive investor speculation. It faltered because the fundamentals shifted: slower migration, higher living costs, and landlords who assumed demand would stay infinite. And here's where it gets a little controversial. Some economists argue that Crestview is actually the warning signal for Florida, a canary in the coal mine. Why? Because smaller cities feel corrections sooner than big metros. They don't have diversified job markets or thousands of new renters replacing the ones who leave. When the market slows, they feel the hit immediately. And that's exactly what's happening now. But if you think Crestview's 4 to 5% drop is eye-opening, wait until you see what's happening in the next city. The declines there aren't just surprising, they're shaking investor confidence statewide. Number 8. Tampa, Florida. A city that until recently seemed immune to the kind of rent carnage hitting other Florida metros. But 2025 has a different story, and it's one that might raise more eyebrows than any other. Here's why Tampa's making this list. According to Florida Real Estate Wire, Tampa rents have dropped by as much as 6% year over year. That's not a rounding error, it's a real shift, and it's supported by Hampton REA's second quarter 2025 report, which paints a bleak picture. Rising vacancy rates across the Tampa market, along with significantly weaker demand from new renters. Now, what's driving this unexpected slump in Tampa, you ask? There are a few big, controversial factors at play. 1. Overconfidence in migration growth. For years, investors banked on Tampa being a perpetual boomtown. They built aggressively. They assumed that every empty unit would fill up. But migration into Tampa has slowed, and some of the newcomers aren't looking for high-priced, amenitized apartments. They're demanding affordability and flexibility. Number 2. Excess supply meets sluggish absorption. New construction hasn't stopped. Developers continue delivering luxury units. But without enough new renters to take them, landlords are being forced to slash rents, offer concessions, and negotiate aggressively just to keep their buildings full. Number 3. Competing markets are draining demand. Yes, people are still moving to Florida, but not all of them end up in Tampa anymore. Some are choosing less dense markets or smaller cities where units come cheaper. That pull has undercut Tampa's leverage. Ask yourself, did Tampa's rapid growth blind investors to its limitations? Because now, those assumptions are crashing hard. And here's a controversial reality. Tampa isn't just cooling down. It may be revealing a broader problem in Florida's big city rental model. If even this high-profile metro can't sustain rent growth, what does that mean for risk in other major Florida markets? Are we witnessing not just a local correction, but a systemic recalibration? Another curveball. The type of vacancy Tampa is experiencing isn't just in old or bargain buildings. High-end and newly built apartments are now going empty because the luxury renter segment is shrinking or demanding lower rates. That's a blow to high-investment properties and long-term returns. So yes, Tampa's rent is crashing, but this isn't just bad news for landlords. It's a potential turning point for the Florida real estate market, one that could redefine where and how people invest, move, and settle in the Sunshine State. And if Tampa is this soft, the next city on our list might blow your mind. Number 7. Miami, Florida. Miami? Yes, even Miami, the land of endless demand, cash-flush newcomers, and sky-high rents, is showing cracks, not the tiny cosmetic ones. We're talking real structural shifts. According to Redfin's latest rental market report, Miami's metro area is now seeing a 3.8% year-over-year drop in asking rents. At first glance, that may seem small, but for a city that's been riding one of the hottest rental booms in the country for years, a decline is a massive red flag. This is Miami we're talking about, the poster child of rent inflation. When Miami starts cooling, you know something in the ecosystem has shifted. And that shift becomes even clearer when you look at what Miami Realtors is reporting. Rising vacancy rates throughout Southeast Florida, including parts of downtown, Brickell, and even suburban pockets that once had waitlists for rentals. More empty units equals more pressure on landlords, equals more price cuts. It's basic supply and demand, but with a Miami twist. So what's going on here? Why is the powerhouse of Florida rental markets suddenly losing steam? Well, here's the controversial truth. Miami may have priced itself out of its own advantage. For years, Miami could charge whatever it wanted. Why? Because people kept coming. Remote workers, crypto millionaires, influencers, entrepreneurs, hedge fund migrants, international buyers, the list goes on. But as affordability hit the breaking point, guess what happened? The pool of renters willing to shell out $3,500 for a one-bedroom dried up. Miami's cooling isn't happening just because demand softened. It's happening because the city went through a historic construction wave, especially in the luxury and high amenity segment. New high-rise after high-rise hit the market, each one competing for the same small group of renters. The result? Concessions, rent cuts, and landlords doing something they haven't done in years: negotiating. And if you followed Miami long enough, you know that's unheard of. Think of it this way. Miami isn't collapsing, but it is recalibrating. The city built for the ultra-wealthy, but the ultra-wealthy class is not expanding fast enough to keep up with the skyline. So yes, Miami is cooling. And if a rental titan like Miami is softening, imagine what the next city on this list might reveal. The dominoes are falling, and we're only at number 7. Number 6, Orlando, Florida. A city almost every tourist associates with fireworks, fantasy, and family vacations, Orlando. But behind the theme park sparkle and the glossy marketing, something real and honestly overdue is happening in the rental market. You see, Orlando has been one of Florida's quiet giants when it comes to rent growth over the last 5 years. The city exploded with new residents, new jobs, and especially new multifamily construction, transforming entire neighborhoods from sleepy suburbs to rental hotbeds. But now, the data is telling a very different story. Let's talk numbers, because this is where things get interesting. Florida Word reports that Orlando rents are now seeing a 1.9% year-over-year decline. Not massive, but definitely meaningful. But hold on, Hampton Real Estate Advisors paints an even sharper picture, showing a 4.3% drop in effective rents. That's more than double the decline some mainstream outlets are reporting. Why the discrepancy? Simple. Incentives. Landlords in Orlando are offering weeks of free rent, slashed move-in fees, and flexible lease deals to keep occupancy numbers steady. These concessions don't always show up in traditional rent reports, but they absolutely affect what renters actually pay. So the real decline is deeper than the headline figures suggest. Here's the million-dollar question. How did this city get here? Well, Orlando did something bold, but risky. For years, developers built aggressively, confident that demand would never slow. After all, who doesn't want to live near theme parks, job growth, sunshine, and a booming entertainment economy? But builders got a little too confident. The city became oversupplied, especially in the luxury segment. Isn't it ironic? The same city famous for creating illusions is now dealing with a rental market illusion of its own. The illusion of endless demand. If you've been watching closely, you probably felt this coming. Vacancies began to rise. Renters began to compare options. Suddenly, paying top dollar didn't feel so necessary when the building next door was offering 2 months free. And here's the part many won't say out loud. Orlando's service-driven wage base simply cannot keep up with rapid rent inflation. When local paychecks fall behind, the market must correct. So now you have a perfect storm: oversupply, wage mismatch, cooling migration, and Orlando's rent is finally feeling the pressure. The magic hasn't disappeared, but the rent premium? That's fading fast. If you are finding this video eye-opening, do me a favor and hit that like button, subscribe to the Globe Realty, and turn on the notification. It will help us reach out to more people who equip themselves with real insight into real estate before investing. And now, the top 5 on this countdown. Number 5, Jacksonville, Florida. A city that rarely makes headlines for the right reasons or the wrong ones. But right now, Jacksonville is making waves for something most people did not see coming. one of the steepest rent declines in the entire state of Florida. Here's the jaw-dropper. According to Redfin, Jacksonville's median asking rent plunged 12.4% year over year. Yes, you heard that correctly, 12.4%. That's not a correction. That's not a softening. That's a full-on rental market reset. And to make sure this isn't some isolated data glitch, Florida Real Estate Wire reported a similar sharp decline, confirming just how significant this drop really is. But the real question is, how did the largest city by landmass in the continental U.S. become one of Florida's fastest-falling rental markets? Here's the break it down. For years, Jacksonville has been sold as Florida's affordable alternative to Orlando, Miami, and Tampa, a place where families could stretch their dollars, young professionals could find cheaper housing, and investors could enjoy strong yields. But ironically, that reputation became part of the problem. Developers flooded into the market. Investors piled in. Entire neighborhoods saw rapid construction. Luxury apartments, mid-tier rentals, and build-to-rent communities all launching at the same time. Suddenly, Jacksonville wasn't the underbuilt, underrated market it once was. It became oversupplied. Are you starting to notice the pattern? Florida's hottest markets all assumed demand would grow forever. But Jacksonville went all in harder than most. Now, combine that oversupply with something many experts gloss over, slowing in-migration. Jacksonville benefited heavily from people leaving high-cost cities between 2020 and 2023. But as migration cooled and affordability normalized nationwide, Jacksonville's renter pipeline shrank dramatically. With too many units and too few renters, the only lever left for landlords? Drop the rent. Fast. Let's not ignore the elephant in the room: wages. Jacksonville's average income simply cannot support the rent spikes that developers and investors tried to justify over the last 3 to 4 years. At some point, renters push back, and they're pushing back now. Vacancy rises, concessions explode, asking rents collapse. And here's the controversial part. Some analysts think Jacksonville's rent drop isn't done yet. With thousands of new units still under construction, this slide may only be the first half of the story. If you thought a 12% drop was wild, wait until you see what number 4 looks like. Number 4. Northport, Florida. A city that was not too long ago one of Florida's most celebrated boomtowns. But today, Northport is facing a rental market correction so sharp that even long-time investors are sounding the alarm. According to CRE Daily, Northport is seeing 4 to 5% drops in rent year over year, placing it among the fastest-falling markets in the entire Gulf Coast region. And if you've been following Florida real estate over the last few years, that number should stop you in your tracks. Why? Because this is the same Northport that once had one of the hottest migration surges in the country. But here's the twist. Northport didn't crash because people stopped liking Florida. It crashed because builders assumed the demand would never slow down. Let's talk about the elephant nobody wants to address: oversupply. The Gulf Coast, Northport, Port Charlotte, Cape Coral, Sarasota, became the poster child for build first, hope demand shows up later. Investors and developers poured into the region during the pandemic gold rush. Permits exploded. Entire communities were carved out of the ground almost overnight. And now? According to commercial real estate analysts, the region is struggling with a wave of newly completed units hitting the market at a time when in-migration is cooling, affordability is stretched thin, and renters have more options than ever. Let me ask you this. If supply is rising and demand is flattening, what do landlords do? Exactly. They cut rents. Hard. Here's something even more interesting. Northport became a magnet for remote workers during 2020 to 2022. But remote work is declining nationwide. Many renters who moved for lifestyle reasons are moving again, some back to cities with stronger job markets, others to cheaper states. That's leaving landlords in Northport with vacancies they didn't plan for. And the controversial part? Some analysts believe Northport's rent decline is structural, not temporary. Meaning the price drops aren't just a correction, they could be a sign that the city was overvalued all along. If you've been thinking about investing in the Gulf Coast, this is your reminder. Boomtowns don't stay boomtowns forever. But if you think Northport's decline is dramatic, wait until you see what made it to number 3. This next city is a shocker. Number 3. Sarasota, Florida, known for its beaches, its art scene, its retirees, and its sky-high rental prices, Sarasota was supposed to be one of the safest real estate markets in Florida. Instead, it's now the poster child for one of the steepest rent crashes in the entire state, maybe even the entire country. Let's start with the number that is sending shockwaves through Florida real estate. According to WFTV, Sarasota's median rent dropped from $3,290 in January 2024 to just $1,886 by January 2025. That's not a typo. That is a 42.7% collapse in just 12 months. Pause for a moment and think about that. What market, especially a luxury market, loses nearly half its rental price in 1 year without a major economic disaster? So what happened? The short answer: construction, construction, construction. According to ERS Energy Real Estate Solutions, Sarasota's multifamily vacancy rate has surged to 14.9%, the highest level the city has seen in nearly a decade. When you have that many empty units, landlords don't negotiate, they panic. And that panic shows up in fast-falling rent prices and desperate concessions. Speaking of concessions, CommercialRealEstateAlpha.com reports widespread incentives across the market: 2 months free rent, waived application fees, $500 move-in credits, and more. When landlords start acting like used car salesmen, you know the market is in trouble. But here's where things get controversial. Many analysts now believe that Sarasota's boom was overhyped and artificially inflated by the pandemic migration wave. Wealthy remote workers flooded the area, driving rents into the stratosphere. But once remote work cooled and affordability snapped back into reality, the demand dried up almost overnight. Let me ask you this: was Sarasota ever truly worth $3,000+ a month? Or were renters simply caught in a frenzy? Because that's the question investors are now asking themselves. And here's another twist. With thousands of new units still being completed in 2025, Sarasota's rental crash may not be near the bottom yet. Some analysts warn the city may face a multi-year correction as inventory outpaces demand. If a luxury destination like Sarasota can see rents fall 42%, what does that say about the rest of Florida's overheated markets? And trust me, number 2 on our list proves that even Florida's strongest cities aren't safe. Number 2, Cape Coral, Florida. A city that became one of the biggest winners of the pandemic migration wave, only to now become one of its biggest casualties, Cape Coral. Let's get straight to the data. According to RealPage, rents in Cape Coral have fallen roughly 6.6% year-over-year as of Q2 2025. That may sound modest compared to Sarasota's collapse, but in a city that once had some of the fastest rent growth in the entire US, a drop of this size is a massive reversal of momentum. And this isn't just a blip. CRE Daily confirms Cape Coral as one of Florida's most rapidly cooling rental markets. But what's really behind this rent downturn? 2 words: too much confidence. Cape Coral drank deeply from the pandemic boom. The city became a magnet for remote workers, retirees, and investors fleeing high prices in Miami, Fort Lauderdale, and even California. Builders responded by going all in, permitting new apartment complexes at a pace the city simply wasn't built to sustain. And now, according to planning and development data from LeeGov.com, overbuilding across Lee County, including Cape Coral, has pushed inventory to unprecedented levels. Entire blocks of new multifamily units are hitting the market simultaneously, creating intense competition among landlords who were once accustomed to bidding wars, not vacancies. Let me ask you this: what happens when hundreds of new units open at the exact moment demand starts cooling? You get a race to the bottom. Landlords in Cape Coral are now slashing rents, offering aggressive concessions, and lowering deposits, all signs of a market trying desperately to keep occupancy afloat. This isn't a gentle correction. It's a market saying, we overshot, big time. Here's the controversial part. Cape Coral's meteoric rise may have never been sustainable. Many analysts now argue that demand during the boom years was inflated by temporary migration surges, speculative investors, and short-term excitement, not long-term economic fundamentals. Now that reality is kicking in, the local rental market is resetting to levels more consistent with actual wages and year-round demand. And remember this: Cape Coral is deeply connected to nearby Fort Myers. Oversupply in one spills into the other, amplifying the correction across the entire region. That means the pressure you see today could get worse before it gets better. Number 1. Naples, Florida. Naples, the crown jewel of Southwest Florida, the land of luxury high-rises, golf course estates, and some of the highest rents in the entire state. But today, Naples is facing one of the sharpest rent declines in Florida, and the data doesn't lie. According to RealPage, as reported through CRE Daily, Naples' effective asking rents have dropped a staggering 7.5% year-over-year. That's the largest decline among major Florida markets. And analysts at commercialrealestatealpha.com confirm the same trend. Naples is experiencing one of the most dramatic rental contractions in 2025. So how does one of Florida's most prestigious, wealth-driven cities end up leading a statewide rent collapse? Here's the part that will surprise you. Naples didn't fall because demand collapsed. Naples fell because developers got greedy. For years, Naples was the ultimate symbol of scarcity. Limited land, high-income residents, endless demand. Investors saw this and said, why not build everything? And build they did. Luxury multifamily projects, upscale apartment communities, resort-inspired rentals, thousands of them, began rising across Collier County. Fast forward to 2025, and that pipeline has finally come crashing down on the market. Oversupply is now the root of Naples' rental crisis. Brand new units are hitting the market with amenities that renters love, but with price tags the market can no longer support. Affluent retirees and seasonal residents simply aren't filling these units at the pace developers predicted. Let me ask you directly, what happens when the wealthiest rental market in Florida suddenly has more units than renters? Simple. Rents fall. Fast. But here's the controversial twist. Some analysts argue Naples was overvalued for years, propped up not by sustainable demand, but by speculative migration inflows during the pandemic. When wealthy East Coasters and Midwesterners stopped relocating at the same frenzy, Naples' rental foundation finally cracked. And now landlords are feeling it. Rent cuts, concessions, free months, lower deposits, you name it. Naples is doing it. Naples topping this list sends a very loud message to Florida. If even the most elite markets aren't safe, no city is. This isn't just a rent drop, it's a reality check. Florida's housing market is shifting, and the cities that soared the highest are now falling the hardest. And Naples? It just became the biggest example of that correction. And there you have it, our full countdown of the top 10 Florida cities where rent prices are crashing fast. From Fort Myers to Naples, the data is clear. Florida's rental market is undergoing a massive correction driven by oversupply, cooling migration, affordability pressures, and rising vacancies. Whether you're a renter, a homeowner, or an investor, these trends matter. Some of Florida's fastest-growing cities are now offering opportunities for renters to negotiate, while investors are facing an unprecedented market reset. And the cities we covered today show just how unpredictable and fast-moving the Florida housing market has become. So here's the big question. Will these declines continue, or is this just a temporary correction before the next boom? Only time and careful data tracking will tell. But one thing is certain, paying attention now can save you thousands, whether you're renting or investing. If you found this breakdown helpful, make sure to hit the like button, subscribe to the Globe Realty for more real estate market updates, and turn on notifications so you never miss a critical insight. And I want to hear from you. Which of these cities surprised you the most? And if you're a renter or investor in Florida right now, how are you responding to these changes? Drop your thoughts in the comments. I read every single one. Thanks for watching, and remember, in real estate, knowledge isn't just power, it's profit.